Hi, my name is Felix Frey.
And I'm ARKK.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco, how are you, man?
Good. How are you? Big
Good,
day.
man. Good. Wow, what a day, huh? They erased everything yesterday, come right back up. Market's pretty strong here. Market's pretty strong. You know what's not strong?
No.
These momentum names, these crazy names that have been strong for 6 months are getting crushed. They're actually getting crushed, some of these names I'm looking at. Anyway, we'll talk about some of that. But I think that the big news in my book is what happened to Tesla. Kathy Wood says she sold stock. It's the first time in a while, I see her selling stock to buy coin. That's it. They're doing this. She's doing the spread that sell Tesla to buy coin. $250 million in coin. That's a lot. That's a lot. But I would make sure everyone. It doesn't cost anything. It's free. You can actually get her activity and what she's buying in your email every day. It's actually pretty cool. It's good that she does it, and who cares? She's thinking about 5 years, so it doesn't really matter if you want to chase around whatever she's buying. But again, you can go to Tesla. I think it's ARK.com, and you could see ARKinvestments.com, and you can see her holdings. You could sign up for the newsletter, and you can see everything she's buying and selling each day. So actually, I think it's interesting she does it. I think it's pretty cool, and you get to see what she's up to. Tesla, I was surprised to see her sell Tesla, to be honest. But she's going to say she trades around it and whatnot. But I was a little bit surprised. I was even more surprised to see that she bought $250 million in coin. I mean, doesn't give it a chance to even breathe. She just runs right in it. I don't know. Who knows where she got in? She could have probably averaged in, hopefully not close to 400. But if she averages in today it's trading 3 times, and she's could be down 10% in just one trade right off the bat. So might go to 700 next week, but what do I know? Yeah. Anyway, what are you seeing, man? What are you thinking?
After some good news, UPS, there has been a positive catalyst issued by Citi. Here it is.
I saw that.
200 price, right? That's pretty good.
Yeah, and they're talking about pricing. What are they talking about? Positive catalyst. Oh, the analyst meeting and shares and earnings. Yes. Mm-hmm. Yeah, there you go.
And also, I've seen something in Goldman, ATVI, and a specific play. Take a look at that. May calls 97.5.
Gotcha.
So, pretty close to what we got.
Yeah, the May 95s are the ones that we spotted they were bought. So they're just stocks up a little bit. They're looking at the May 97.5 cost.
Yep.
Interesting. It's look, these guys, they're looking for same stuff. Well, look, I bet you they're talking. I've seen some of the research over the last couple of weeks. They basically are talking about pricing and how they have ATVI has close to 70% margins. It's huge, right. And they have so. I mean, we've talked about ATVI ad nauseam, but I think it's a good name. I think that's a good name, and I still think UPS. I think they're great. Barclays was out with a railroads piece, talking positive on the railroads. Which again, they're looking at the deal. What does that mean for the rest of the community, the industry? Stocks up. So we got some good stuff today. In the middle of the show, we're gonna actually go through this strategy called the wheel. Mm-hmm. Okay. This wheel strategy, I don't know. I didn't even know what it was, to be honest. I've never heard of it. But over the last few years, I guess someone has come up with the wheel. And the wheel has destroyed more accounts than I can imagine. You know what I mean? I get a lot of emails, people asking for help in different scenarios. By far, this wheel strategy is a disaster. More so than iron condors. It's just, it's people learn eventually that the one time you lose, you take out a lot of the gains, and it takes months of work to make that and whatnot. But This wheel thing is something else. It's something else. And I'm going to show you the risk today of how to think about it, and so at least you can make your own decision. I think people are pitching this idea, and unsuspecting investors don't realize the amount of risk in it. So we'll go through that in lockstep.
Cool.
But what I am seeing today, did you see this XPEV? It's interesting.
Yes.
So with the world imploding, someone comes in and buys massive amounts of calls in XPEV. So this EV world is literally imploding. We're watching it implode. This is XPEV. Okay, let's take a look. We talked about this mountain and this side of the mountain. This is clearly a massive move from 20 to 74. Let's go here and look at what we're seeing here. Sure, this is 60. This is 7. This is the fantasy as it was going to 1,000. Remember, this is clearly some level right around here. We're looking at. See that?
Yep.
I'm looking at this. Kind of looking at this over here. This, a break, resistance, never gets back up. And now we're looking at, here's a gap that you want to sort of pay attention to. This gap right here. And then there's another gap right around here. So we have something going on. Let's call it somewhere. Since this was a low, we'll kind of use this one right here. Something going on right around here. A lot of volume, but it gaps up, right? So you have this volume gaps, and people are paying mainly these prices up here above 20. What number is that? 30. So above 30 and above here is where people are getting involved. Goes all the way up and has been doing this dance straight down on the side of the mountain. Now, this is we've talked about. They all look the same or close to the same anyway. They were having this sort of, let me do something here. Take out some of these so we see. And I'm going to take that out for a second. So, we were looking at something like this or even like this, but, there's this, what we'll call a bear flag, trending down here on XPEV. And someone is buying. Let's go now to XPEV. Let's go XPEV. So someone is buying April 30th, which is by itself is a clue, end of the month.
Okay.
Why end of the month? And why is somebody buying the 38 calls in XPEV? Okay, so XPEV, 38 calls. Looks to me like someone reached for them in the morning, 46, 47, 48. They were buying these. Volatility was up on the name, continued to go up as people started chasing after it here, all while, everybody's buying these while the stock is actually trending lower. So, by the way, when everybody's buying calls and the stock is going lower, remember, buying calls means people are buying stock. So once that stops, the stock might even actually go lower, right? Mm-hmm. You understand? The demand for calls is causing buyers in stock here. You could see them coming in, buyers. So they're buying calls, which essentially is pushing demand up on the stock, and the stock is still going down. So after they stop buying calls and there's no more of this call demand, what happens? So I'm confused by this buyer. But again, we talked yesterday about Chinese investors buying, big calls. You have to pay attention, but there's something here that doesn't make sense. It might just be, I don't know. To be honest, this is a long way up for 2 weeks out. They did come out with an announcement today about autonomous driving. In the past, XPEV would have doubled, right? It would have went from 20 to 40 on a news like that. Today, right. You're not getting that. You're not getting that same. The stock is down. It's heavy. So you're seeing this across the board. This 38, it's tricky. I don't know what to make of it. I can tell you that the stock is under a lot of pressure here, and the technicals, it's breaking this, which brings into play a continuation of this down pattern down here. In XPEV, again, you're looking at where it started, right? You're it always comes back to where it started on these things, and it started really right around 20 to 24-ish, and you got some gap moves here. So there's a lot of people stuck up here. Okay, this is the game here. It's a lot of people are stuck, and this happened to be, a level as well that has been important. So we're sort of in this range, and it's very weak here. This is a technical level because this has been trending higher. Technical broken, good volume. I'd be nervous if you're long this name. I'd be a little bit nervous here. I don't know what people are expecting to get it to break through. It could be a complete fake out. Market all of a sudden jumps. Everything jumps. Tesla makes an announcement. NIO, whatever. I don't know, but this will continue to be pressed. This is like a perfect chart where the shorts, the professional shorts, are basically saying to the market, I'm going to press you until you tell me I'm wrong. Okay, right. That's what you're up against. I'm going to press you against until I'm wrong, and they're pressing the big guys who are long the stock, and little guys who were long the stock, little by little, saying just pair off, pair off, pair off. So you see that in XPEV. That's a kind of a disaster. But let's take a look at what we're seeing, in NIO. Right, we're talking yesterday a lot about sort of NIO. Same chart. This one's even looks a little more ominous. It's right at the 200 day here, and again, we're looking at the same thing, right? This isn't rocket science here. It's just under pressure, and this one's a lot clearer. Where look how clear that flag is. So now you get a break of the 200 day. Remember this, we were pointing this out for the last 6 weeks, how it's turning. This is sharply down. It consolidates here, and now you're expecting this type of move down this way. Okay, this is not a pretty sight. This is not a stock that if you're hanging here, it's like you're hanging by a thread, right? Like what happens after 34 and a break here? You're looking for those gaps. Here's a gap. Here was some support. I mean, we're talking about 10 days of trading, some support. You're past. This is a big volume day up here, which was sold to. So I'm looking for the volume days, right? I'm looking for, show me the days where there were big buyers. Show me the days where there were, there was activity where people cared about the stock and they were buying. That's what we're looking for, right? That's what we're trying to figure out. Here's some buying here, several days in a row going here. And what's happening is you're looking here at activity that's being sold. It's being sold right in the face of these buyers. It's likely these buyers here or these sellers over here. It's likely that that's what's happening. Once it stops, the guys who are buying here are letting go. Everybody else is being left holding the bag here. If you're not active and saying, okay, I sense that this is, coming off, then, what are you looking for? Well, you're praying for these buyers here step up when it gets to 26. You're betting that these buyers, and remember, we're not talking about small amounts. We're talking about 400 million shares of the stock, trading at these levels. So there is buyers here, right? They bought it here, they bought it here, they bought here. So it's lockstep 1, 2, 3, and then there was some volume here, but there was big volume here selling. So we're really looking at this area. This is 24 to 26, 18 to call it 20, and 16 to 18, 18 to 20, 20 to 20, 24 to 26. These are the areas where you're really hoping that this thing stops. Remember yesterday we saw someone take off a portion, just a small portion of a lot of puts in June, and they were selling, $3 puts, thinking 29 is probably a buy. So 29 gets you right to the top here. Maybe that was the buyer and saying, I'll buy more. Or it's this same buyer. He bought 1, he bought 2, he bought 3. It's come down 29. I'll buy a little bit more. A lot has happened in the last 5 months. He says, okay, I see. He saw value here. Okay, 5 months has passed. They're executing well. I see value a little bit higher. I might be a buyer somewhere around here. So that's where the put seller was telling us. He was signaling to us yesterday, 28 to 30. Remember?
Yep.
Right?
Yep.
Okay. And today we're seeing this thing break down. You could see a drop here. You could see it's to think that NIO can't go from 35 to 22 is, just your imagination thinking that it's still going to go up to 70 without getting everybody out. Right. Remember, we've always talked about what these momentum names try to do. NIO might go to 500. It's not taking everybody along for the ride. You have to imagine a bus and, there's a couple of seats already taken and, that's BlackRock and guys that are going to be there for 10 years. And then there's a million investors that just hear a story and think, oh, I want to get long NIO for the 1,000-point move. You're going to have to live through this. And this is incredibly difficult to live through. Okay. Yeah. So this is what we're looking at. That's what we're faced with here. I don't like any of these stocks, just for the record, we continue to see them under pressure. I am looking at this as saying, prove to me I'm wrong. Prove to me that this isn't going to 10. right? 90% of these stocks will go to 10. Prove to me that it's not going to go to 10. And that's what the professional shorts do on this side of the fence. That's what makes it so much harder to actually trade, because on any pop, they're going to continue. They're going to say, show me 3-4 days in a row. Beat me, right? Beat me to the punch here, because I'm beating the hell out of you from 66 down to 34, and you got nothing. And I know that you're weak, right? That's what this chart is saying. Right. All right, you're winning. By this point, when they come back here, this move up here to here, sorry, I'm not in this, but this move from 42 to 52, and they come back and they sell it, and you bring it up to 50, and they come back and sell it again in your face. This is a fight, and they're basically saying, you got nothing. I took your best punches over here, and now I'm in control. And as it goes down, they keep selling. Maybe they buy a little bit back to cover some shorts. They reload over here, and they're just literally pounding on the buyers here and the longs, and they're basically saying, beat me to the punch here, because I got your number, and I see that you're hurt, and I see that you're hanging on a thread. And that's how you have to read this thing. That's how you have to look at it, right? And the highs and the lows and how we're framing this thing, it's all giving us clues over time. And so right now, this is not a good, if you're long this name, you're not winning this fight right here. Yes, you might win the 10-year battle. NIO might trade to 100. You might have to see this position go down to 20 before 2030. And if you can live with that, and it really is a long-term game, and you'll be buying at 28, 24, 20, 18, 16, and you're Warren Buffett, and you're going to hold for 30 years because China's got 50 billion people by then, and $100 trillion to spend, and blah, 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 then that's great. And it goes from, when they all collapse and it goes from 20 to 1,000 over 10 years and you make a lot of money, that's one way to invest. There's no doubt there's a lot of money to be made. But if you're in the options market and you're playing around for 3 months, 6 months, fundamentals don't necessarily matter that much. It gets diluted by time, right? Fundamentals need time. And if you have 3 months, the fundamentals may not work, play itself out. You might be out of money before the fundamentals actually work. So, this is where sizing is involved. This is where using options are involved to manage the risk reward. But this is that moment. This is where, it's very, very dangerous right here for NIO, XPEV, and we'll just throw the other one just to look at it, LI. Same stock, right? It's essentially, it's Chinese auto. This is actually even looking worse here, because now it's breaking this where, the buyer stepped in and says, no, I got it. I'm in the game here. And again, can't get it through here, right? Can't get it through this level. Can't get it through this level. The shorts just start salivating, right? They know. I mean, that's what's happening. They break it. Okay, they watch you come here. When you can't break through here, this level, they're salivating. This is a weak stock. And when we talk about a weak stock, this is what we mean. Prove to me that I'm wrong. Right now, I'm beating you where you came back at me here at 20 and saying, no, this is worth 27, and you're buying it, or somebody's taking it up, and then all of a sudden it's back through 20. And here, there's no, you see this wick right here, this long wick? That's someone basically, it goes lower, and someone that day says, nope, you're wrong, we're taking it up. Right here, unless this thing shoots back up to 21, that buyer who did that is no longer there. That's the clue. He's no longer there. And if the shorts hold it there, tomorrow you could see it open at 17 and a half, because you think they're going to stop. They said, you're not here. What happened? I thought you were here at 19 and a half. You're not here at 19 and a half. I'm going to take it on the open. I might take it at 18. Let's see what you got. Right. That's how the game is played. That's how they get people out. And if people aren't getting out, if they don't see, and it's just, they're allowing the shorts to just take control, it's gonna keep on piling on. It's gonna keep on piling on. So this is how you got to be careful. This is, again, I say it, I'm not trying to predict here. I'm trying to give you a way to sort of tell you how the story is developing, to show you weakness. This here is weakness. Okay. And, will it shoot back up? I don't know. I'm not trying to do that. I'm not trying to tell you exactly where it's going. I'm trying to highlight weakness. And then from there, take into account the options pricing to see if we can find great risk reward to play this. But surely if you're long stock, there might be a better way to be long the name without risking your stack on more and more shares as you keep buying, and the thing's going against you. Okay. So that's the mindset. The mindset is not, I'm not trying to tell you, I think Lee's going to be here or there at in 2 weeks. That's impossible to do. What I am trying to say, the thing is damn weak. And if you're long shares, maybe this is a better play. Maybe you could do this and just sleep at night, take a 3-month call spread and just sleep at night. That might be the best way. So anyway, this is something that I think is important for people to understand. It's important for people to, when they hear me say, is this going to crash? Is this, to some extent, yeah, I'm trying to get you to watch the damn video. I'm trying to get you to see it. But in the meat of the video, I'm trying to explain it's a weak stock. There's a lot of names that we're looking at. They're weak, and we're trying to explain to you why they're weak. That's the difference. I'm trying to explain. I'm trying to show you specifically. And that, again, it doesn't mean that you go out and run out and buy puts, because now we have to actually look at the puts and say, are they expensive? Is it too expensive for this? Maybe I want to stay long, but I could sell my stock and now get into this call spread. We did that in AMD. Have you seen AMD lately? Up, down for the last week and a half. Looking at the stock, thinking what's going to happen. Nobody knows. Yesterday, it looked like AMD was going to crack through the lows. Today, it is an upgrade. It's trading 82, up $4 or $5. The point that I'm trying to say is, in weak spots, this is what we're trying to teach you. I'm trying to teach you stock versus options. When you're in stock, when options might be a better play here, because it's weak. Because I'm showing you, if AMD breaks, I think it's 74, it can go to 64 in like 24 hours. Right. So you want to be careful. So we're spotting these points of weakness and then trying to decipher whether or not you should buy puts or whether or not you just get out of stock, buy call spreads. That's how the big guys are thinking. That's how they're using options. When we see call buyers, we're also trying to say, does he think it's going straight to the moon, or is he actually getting out of stock and he's just buying these because he's concerned? And we've been seeing a lot of that regardless of what the stock market is doing. We've been seeing a lot of that over the course of the last 6 weeks. It's very, very, very important for anyone watching this podcast to understand what we're trying to say and what we're trying to do. Options, everybody thinks options is a game of buy it, I think it's going up, I buy calls, I make money, and that's it. It's not. Options is a game designed, with leverage to help you manage the risk reward of your portfolio and to look at stock versus options, and then make the decision which one is better. How you do that is what 3 Steps to Profits teaches. So, you can look at technicals, you can look at fundamentals, you have the story. And now you look at the options. Now you got to understand what to do there. Okay. And that's why 3 Steps, I think, is going to help everyone who's watching this. And the podcast, the people who have taken 3 Steps understand how good the podcast is, because they understand what we're trying to do. We've designed a mathematical game that we're all trying to play, strategize, find interesting moments. I can give you technical setups that I use. I gave you DeMark yesterday. I'm giving you this ABC and the stuff for you to look into. All of these things are unique to each individual. Some people there's so many different technical analysis. On YouTube, you can find a million things. Find a good teacher in technical analysis. And I could teach it, but you know what? I teach what I know, but there's a million things. So this is important. I think it's super, super important as we're seeing things completely melt down in this space. Talk about DraftKings, Fubo, Plug, Blink. Go look at them, Highline, all the Chinese names. These are CCIV, you name it. They're all getting crushed. And it's just the professional market either selling longs or the professional shorts are saying, I'm going to press. Beat me, because I'm beating the hell out of you right now, and this is not even fun anymore. That's what they're saying, and so I think it's very, very important. Anyway, I said my piece. We're gonna bring up one more because I saw this today and I thought this is interesting. Like, who would do that? Okay, so we're looking at a favorite name. We're gonna get hate mail from here. I'm putting barbed wires around my.
Oh, there it is. Yep.
AMC. Okay, AMC stock up 3.32%. Great. That's awesome. The one thing that's concerning to me was, where did I see these things? Did you see these puts today?
Yeah.
The 10s, were they June? Let's see, June.
June, yes.
June 10 puts here, $2.46. And I just thought to myself, that's a lot for the 10 puts and the stock here. But, what are they thinking? So they come in to buy these things in the morning. Okay. They're coming in to buy these things in the morning. And they're paying up for it to have some, it looks like some spread. So it looks like they came out, but ultimately it looks like they're getting long these names. They're getting long these things. I don't know where it's coming from. I don't know if they're rolling here or rolling out. Looks like they might be rolling from, let's see, we'll try to find the other ones. Maybe they're rolling out of this, getting out of the 7/8 and rolling into the June 10s, give themselves some more room here. But essentially June 10s, I'm thinking $2.50. $2.50, they got to be thinking this thing is going to 5, $4. Like, why would they think AMC is going to find $4 in the next few months? There's an article here. I just took a look at this one. So you have here positive. This is talking a little bit more positive. You have negative. So I just want to read a negative. I get the positive. People to go back to see the movies. And then what I want to see is what is this person saying? What's actually going on a little bit here? I haven't looked at AMC in a while. Just read it here. At the end of 2019, 103 million shares. Currently, the company has 400 million outside shares. That's called dilution, and they call it a heavy dilution. Okay, which means that they're raising money by selling shares. Okay, so when you buy shares of stock, you own part of the company. All of a sudden, if they're giving shares out like hotcakes, everybody else, your shares are worth less. Now, it's interesting that over the time, the stock has actually tripled, right, quadrupled. So this is really interesting to think about when you say, okay, in the last year, let's go save changes. No, let's look at AMC. Daily, let's call it, we want to see 2 years. Okay. So at the end of 2019, stock was trading $7. Stock's trading $7, and 100 million shares are outstanding. We're now 15 months past that, and there's 3 times the amount of shares outstanding, and the stock is actually 20%, 30%, 35, 40% higher. That's like insane. And that's before the pandemic. So now we get to the pandemic, the stock is trading near bankruptcy, okay, coming down to $2.50, and trades up. It's up 300%. The stock is up about 300% from down here, call it 280%, 300%. And there's 4 times as many shares outstanding. Okay. They have a lot more debt. They're in the middle of a situation where we don't know whether or not movies are going to attract the same buyers that was there over the course of the last, before the pandemic. I surely am not going to the movies to sit in a movie theater with a mask on for 2 hours. I don't like masks. I don't like wearing the mask, so I don't go outside. I just choose not to go out too much and go to a bar. If I can watch it at home, I'll watch a movie at home and get nice dinner and with my wife and have popcorn if I want. Whatever I want to do, I can do it at home. I don't need to sit there and watch it, with the mask. So how many people are like that? I don't know. Maybe I'm an outlier, 1 in 1,000. But, I could see it makes sense now when I see that. After reading that article, I didn't realize the share count had gone that high. And by the way, the kicker in that article, here's the kicker of that article. I forgot the kicker. Okay. So there's currently 450 million shares outstanding, right? And then it says this month, the company has asked shareholders for approval of a sale of 500 more.
Oh my God.
So 450, now they want to have the approval to sell 500 more, to double that to 1 billion shares. What's that going to do to the price? The price you can't just create shares and the stock stays at $9 or $10, right? You can't just say, there's a million or 450 million shares at 9.5. We're going to issue another 500 million. It can't be at 9.5. It has to actually get cut in half, which then makes sense that if it gets cut in half, those puts are now, the stock is going to trade closer to $5 if they say, okay, you get the approval and they're going to start selling shares. That's dilution. Nice. And that's why someone would be buying the 10 puts. I get the story. I'm not going against the whole Wall Street bets. This is the risk. The Wall Street bets crowd is going to think, people who own the stock think, no, everybody's going back to movies. This is what they're doing. They might change the whole landscape of a movie, how the experience of the movie, maybe, and maybe that works. But for right now, companies saying we need to raise cash. We're going to actually sell maybe 500 million more shares, double the count, which means you got to half the price. And that's why that makes sense now. It didn't make sense when I first looked at it. After reading an article, say, okay, catching up. Okay, I understand. That's clearly a risk, and someone is putting their money where their mouth is here and buying puts. So something to think about, as all of these names get killed and people are trying to search for answers. Maybe the answer is just to reduce the position.
Right.
Okay.
Yeah.
Let's talk about what else we got.
I got a WDC, Western Digital.
Western Digi.
Mm-hmm.
Okay.
Called buying.
Western Digi. Which ones? June's?
Maze.
Oh, Maze. Sorry. My thing was a little slow here. Maze. May 19,000. Call spread? Oh, it looks like okay.
Or
So what
rolling,
I'm
yeah.
yeah, so my eyeball just immediately goes to the volume versus the open interest first, right? Volume versus open interest, and then 75 calls. These look like it just looks like he's rolling down. So it looks like he was probably long the 80s. So just looking at eyeballing the stock had traded 74, was trading up. Maybe he got long the 80s here, and now he's selling the 80s. It looks like to buy the 75s. I usually go to the smaller ones because the smaller ones are a little bit easier to see where traded. Okay, so trade spreads, we see that, and then it traded 51.7. Right, didn't really move on these three print. Yeah, a little bit over here, but it traded on the bid, and it was 121, 120, and it was trading down. Okay, so looks like it was a sale on the 80s. Okay, looks like the sales on the 80s, and it looks and so it would be a buy on this spread on the, let's see here, 50.2, 50.4, and I'm looking at in general here, sorry, it's going to be about the same, and this is a little bit closer to the eye. So as a clue and common sense wise, I think that this is he's just rolling down. And what's interesting is just to show you that you see here, he probably bought these when he bought these back maybe in the last 3 weeks. You see this shaded area, the unshaded area, this box was probably right here at 75 to 80. Okay, so he was buying it near the top of the box, and now you can see that it's outside of the shading area, and now they're moving into the box again.
So, I mean, so how do they know? Do they calculate it? Is there like a way they?
It's a great question. So they're not using my tool. Like
Right.
they're doing this in their head and sort of, when you understand risk reward, I mean, I can do this without I can do this without this as a crutch. But when you understand risk reward and you understand that this becomes a way out of the money option, and way out of the money options are very hard to win at, way out of the money. Out of the money options, sort of this 45 to 25 range, delta or probability being in money. This window is a lot better for the leverage. This is really hard to actually win on any consistent basis. Okay, so they want to get closer. They want to come back and say, okay, I want to get closer. I don't know the exact position here, and I don't know what this guy's doing. It might be because he's looking for. I'm not sure. The chart looks a little weak as it pushes back down through the thing, but let's just look here. Looks okay. From 2 years out, it looks like it's coming in. But I'm looking at what I was looking at here, just to give you an idea real quickly. So you see this. Let's go here. You see this right here. So it makes this high. Yep. So I don't know when this guy bought, but it's likely he bought when the stock was kind of doing this right around here is my guess, or somewhere over here. He buys the 80s. It trades. To me, this is weak. See that you have a high here, resistance, breaks through, and then comes back down, and then tries to break through again, comes back down, and then trades down. That's weak starting really right here. It's like you wanted to see it hold. And then it's trying, doesn't, and then it breaks down. So right here is where it becomes, would say, all right, this didn't make it up here. So now somebody's buying the 75 calls. He's looking for a breakout. And what is that? Is that earnings? So you get earnings here. So Western Digital tends to trade pretty big on earnings, up or down. So it makes sense that he likes it. The last earnings, I think they blew it out, was somewhere over here, and the stock traded up pretty significantly. So yeah, I would say somebody's long here. The 70 calls, I believe those were buyers as well. So you have buyers in the 70s. He's coming in, and somebody's loaded up on the 75s. Fair enough?
Okay. Fair enough. Cool. Thank you.
Let's take you want to talk about the strategy?
Yes. And before we do, guys, please like the video. It really helps us out a lot. And subscribe if you haven't. Turn on the bell notifications. Now, I've been dying to hear about this wheel strategy.
So the wheel strategy, man, like I said, the wheel strategy is something that has popped up maybe in the last 3 years. It's not something that I even knew what it was, to be honest, but I would hear people say the wheel, and I just wouldn't pay attention. But in the last year, I've been seeing, really in the last 4 months, I've been hearing a lot more because people ask me more and more questions. They're asking me, does this really work? Or how does it work? Or what am I doing? What am I missing? Right. And, I sent some to you earlier today, and it was a Tesla. Someone asked me a question on Tesla. And this is where it really first started catching my eye a couple months ago. Can you show that here? Okay, so can you push it up a little bit? Is it a way to make it a little bit bigger on the screen? I'm blind, man. I'm going blind, getting old. There you go. Okay, so go all the way up. So it says, all right, hi, this is what I'm doing. Completely new, selling some property. Great, getting into the option market. Okay. Then he tells me I'm allowed to, and the profits will allow, okay, I'm selling private profits will allow me to sell 3 put contracts in Tesla. Okay, Tesla was 811 at the time. 811. So Tesla at 811 at this present time, if I sell 3 contracts at the strike price of 775, which will pay me a premium of 36.60 with an expiration of 8 days, I theoretically can do this 3 or 4 times a month. And if I eventually get assigned, I can sell covered calls and go back and forth selling puts and covered calls. What am I missing? So this is the wheel, essentially. So you basically start out by selling puts, okay? And if you get exercise, so you take the money, if you get exercise, you stay long the stock, and then you sell calls. Okay. And then if you I guess there's different parts. People have different strategies of how far away from Tesla. Some people target dollar amounts. Some people target 5-10%. But either way, get exercised. You're now long the stock. What do? You say, I'm long. I could sell calls now. Sold puts. Now I can sell calls. This works when the stock doesn't move that much. And it's kind of just going like this. But when you're looking at Tesla, and you can see my response. Let me show you what my response is. I won't tell anybody to not do anything. I just, that's not my role. My role is not to say, don't do this strategy, do that. But I would say, I asked him to do an exercise. I said, what if the stock goes to 750 by next Friday, which means he would be exercised? Which 2-week option would you sell? I then asked him at that expiration, let's assume that Tesla goes down to 675, how much, I asked him to figure out how much he would be down. I then say, once you figure out how much you'll be down, you're going to wind up having to sell some call option, a new one. And so you should try to think about which one you would sell and how much you think you'd take from it. And then back and forth, it's likely in that scenario, if the stock went down like that, it's likely you lost a lot of money and then you are stuck rolling for months trying to make it back. And all the while still susceptible to the same choppy moves above or worse, a sharp move lower. Call overriding can be a very frustrating process. So what's important to understand here is that this guy is going to sell 3 lots, okay, at 300. That's 300 shares at $670. So basically, his whole stack is in short puts, okay, and he's now the stock actually traded to 535. Okay, that's where the stock traded. Now, maybe he didn't get caught, but I can tell you that he did get caught. If he did this, he would have gotten caught here. He would have gotten caught on the next 2 weeks, and he wouldn't gotten caught on the last 2 weeks. And the stock went from 810, where 811, to 535. Okay, now once it gets to 535, this person is down 200 and almost 230, probably. On the first strike, on the first puts, he's down from, keep that up, I think it was, what is he down? 6, let's just do so it goes to 750 by next Friday. So at 750, okay, now I can take it off. At 750, he gets long, or 775, because that's what he's doing. At 775, he gets long. So from 775 to 535 is 240 points, okay? So he's down 240 points on 300 shares. Now, on the way down, the idea is that he could sell calls, 2-week calls, and collect free money, $1,000, $2,000, $3,000, whatever you want. The problem is your main position, long stock, is down $65,000, $70,000. Okay. Now, what happens then? The upside calls that you're trying to sell, okay, you're still trying to sell 5% above or trying to target a certain amount. When you sell a certain amount, 3 lots at 5% above, you now have a position where you're long stock and short calls, and you're down 60, 70 grand. Maybe you took in 10 grand on selling the puts and now selling 2 calls. Maybe this is the third, so it's 12. So now you're down 58 grand. And then the stock goes and does what? Tesla did what? It ripped to 780 yesterday. Okay. So now you have the situation where you make a little bit back, maybe 10, 15,000 on the stock, maybe it depends on which strike you sold. You take in that premium, net, the stock is now 775, where you started, where this person started 6 weeks ago, yet you're down $45,000. Wow. It's not this, the strategy is pitched as a income generating strategy. all you got to do is sell puts, and then you sell calls when it's down. And you say, and yes, it works if you sell puts and it goes up, and then you sell puts, it goes up, you sell puts, it goes up. And then, like any stock that's trading 60 to 100 vol, at some point it's going to have a sharp move down. Has this sharp move down, all those puts that you've collected, okay, you now a long stock. And if you get a situation where, like Tesla went really down, then you take a beating all the way down. Now you're all the way down. And on the flip side, as you're turning, you're going up. This is incredible. This is incredible that it's being pitched without people understanding. Time and again, I'm getting emails of people doing this strategy and getting killed, especially now when you go up this mountain, and down the mountain, you're destroyed. Your account is destroyed. And you know what happens? Because the idea is, oh, well, then you could just keep selling calls until you make your money back. It's fair. The problem is, how much is the 550 you sold? Say you went down to 535 and you sold the 550 calls. The idea is it goes to 775. Now what? Okay, now you have to buy back those 550 calls, okay, and then roll it down to another 550 or a strike higher. But if you choose a strike higher, you actually have to pay money. You actually have to put money in. So you try to do the same strike, the 550 calls, you're going to collect $1 to $2 on an earnings month like that far away. $1, $2. You'd have to do that on 3 lots, which is about $300 to $600. So call it $500 on average. You're down 60 grand. You'd have to do that for 100, and these are 2 weeks. You're going to collect $500 every 2 weeks. You'd have to do that for, what is that, 120 weeks, which is 2 years, just to get your money back. This is the problem. You know, now you're stuck. All your money is stuck on one trade. You can't even look at the market because you can't do anything, and you just have to wait. And every 2 weeks, you have to try to get your money back. And you want to basically hope that the stock trades back down to 550, and then you could start getting more of your money back increasingly. Okay, but then if it goes from 550 to, we think it might even go to 400, now you're back in the same problem. So you never made money. All this nice returns on the way up, on the way down. It's very, very, very difficult. Now, call overriding, it's called a short gamma trade. Short gamma is because you people might think, oh, you're selling on the low and buying on a high. Exactly, that's a short gamma. Buying options is long gamma, which means that when the stocks go up, you know, and your long calls, you sell it on the way up, and when it goes down, okay, you're trying to either average in or buy more, or you can exit a stop loss. Mm-hmm. You know, you're doing it, you're trading the right way, as opposed to selling options, which is selling leverage. You know, it's not for free. You're not getting this 2,000 a week or whatever you're doing for free. There's leverage involved. And if the stock actually collapses, you have leverage on the stock. And it's important that people understand this. I'm telling you, selling options like that is a very difficult game, especially it gets even increasingly difficult on a 100 vol name. The premiums are so juicy. It's an illusion. They're so juicy that you want to sell them. You say, hey, if NIO doesn't hit, 30 by next month, I collect $1,000. Yeah. What if it goes to 20 and then you're out 9? It could happen. And so it's important. All these things are just important lessons to learn. I'm telling you from seeing and talking, having the same conversation with people every time. Nobody knew, or it's not explained. It's not explained that if the risk is the stock goes down and up, or stock goes up and then down sharply. You're seeing it happen every day right in front of us. We're seeing every one of these things. They go up and down sharply. That's the risk. And if it happens and you're doing this wheel strategy, you can get really, really caught and game over type of situation. Yeah, it may not be complete game over, but you're now stuck in a position that's kind of game over for 6 months, where you're just trying to hope that the stock doesn't completely crack, and you're just trying to collect money back. It's not something that I think people have fun playing. At least here, someone has a $100,000, $200,000 account. You're not playing with your whole stack and going to sleep at night going, I hope Tesla doesn't crash tomorrow, right? That's not what you want to do. You want to go to bed having $20,000 in options. You have a $200,000, having $20,000 in options, and playing a game with 20, getting good leverage, okay, and trying to play a game like we're strategizing. That's how I like to sleep. That's why the people that I ask and I talk, that's how I would think most people like to sleep. You like to sleep knowing and not having to pray that something doesn't go wrong in your account every night.
Right.
That and then, by the way, if you're not praying, then you don't know the risk. Because then there's people like I ask people, I say, they show me their portfolio and they ask me, what do you think? As I'm coaching them, and I say, What do you think at night before going to bed? Just curiosity. Like, what do you think as far as your portfolio? It's like, well, I think, hope the market, goes up or whatever. Okay. I go, it never crosses your mind that, let's call it Tesla. Tesla could open up at 400. Like, it never crosses your mind that could happen. And say, well, if it does, that wouldn't be good. It's like, if it does, it could happen, and if you're not praying at night to whatever God you pray to, or the universe, or whoever that being is, somebody needs to help you, because you're not understanding the risk that you are jumping in this game. It's important. It's important. People don't understand that they're making 50, 60, 70, 80%, and they're actually so levered. They're so levered. And then you ask them how they make it. It's like, I make like 10 grand a month. Say, okay, well, what are you doing for that 10 grand? And they show me a portfolio and go, oh my gosh. These stocks, momentum, they go down 40%. You know how much money you're going to lose? Now get out before the famous last words. I'll get out before the market crashes 30, 40%. It's hard. It's very hard. And people have to understand how they're making the money. That's important. How are you making money? That's my question when I coach. How do you think you're making the money? What is it that you're doing that's so powerful that you're making that money? And if they can't answer and say that I'm assuming the leverage, I'm willing to take the risk here, and understand what that really means. Because some people are like, yeah, I said, well, what do you know what that means? You're willing to take the risk? I say, well, yeah. And if the stock goes down, I know I'm going to lose. Do you know how much you'll lose? Like, why do you think the stock can't go down 80%? You just looked at Viacom, a big stock was climbing for 2 months, 3 months, go from 30 to 100, and then trades down to $30 again. Why do you think that it can't go from 100 to 30 in 5 days? Like, why do you think that? I try to get people to understand that, and to actually start praying to whoever it is that if that's how you get a trade, fine. Just go to bed saying a prayer to that God, being, energy, whatever it is that you believe in, because this could happen. And I don't want to see you blow up. So look, it's the wheel again it's not easy money. It's not something that, it's pitched as something, just collect premiums, collect this, collect that, has a nice name to it. The wheel, right? You're circulating, it's circulating money. Your money's coming at you. There's a lot of risk, and everybody should know that. And whoever's teaching this wheel, you should out them a little bit, just to say, can you tell us the risk? Like, it's okay to ask people, what is the risk? The risk is you can actually blow up, and that's never fun. Anytime. Okay. And you only get one shot to blow up, and then you got to recuperate, and then you got to blow it. So this is exactly what we need to, this is what I'm trying to do on this podcast. You want to do the wheel? Fine. I'm just telling you, do you understand the risk?
Yep.
It's fine. You want to do a cold overriding? You want to do sell iron condors? Totally fine. People make money doing that, but do you really know what you're doing? Do you really understand that you might work for 6 months clipping 25 cents, 25 cents, 25 cents, and at some point you're going to get sharp moves, and you're going to lose 10-1 on one of these trades, and you're not going to have time to get out. This is what people need to understand.
Yeah.
Okay. This is what we do. This is what we practice. This is why when I put out a put option, and I'm looking at the puts, it's because I think there's risk to the downside, but we also have calls. We're carrying calls. We're trying to play a strategy game where we're protected, and we don't know where we're going, but we're looking for individual big moves. And while we're attempting to do that, we're trying to make sure that we're risk managing and saying, a loser's a loser, get out of the house. We want to make sure we're going to keep it tight. The wheel is not, let's say this, the wheel is not without risk. Okay. It's not without risk. And there's a lot of risk. And let me tell you, there's a lot of risk. And if there's one strategy that I have seen over and over again, that people have lost a significant amount of money and has messed them up here, because by the time I'm talking to them, they're down so much, you can't even talk to them, because it literally takes hours of trying to get them to understand how this got screwed up. That's the problem. Okay. That's the problem, where you're just looking at it and going, I paid up here. NIO was 60, then it was 50. I bought it at 47. Now it's 37. And I'm basically still trying to play it for the upside. That might not happen for another 3 years. And you might be sitting there waiting, taking brutal losses in the meantime. And at some point you get tired and say, I'm out. And by the way, that's the moment where send me an email, because that's when the stock is going to rip.
Yeah.
Okay.
Exactly.
Anyway, That's my 2 cents. It's if you're using it and you're making money, God bless you. That's your strategy. That's how you do it. But that's not what we're doing here. That's not what we're here trying to get the leverage, take the leverage. You're selling it. take the leverage and try to manage that leverage. And that's called risk management. It's called risk reward analysis. And that's what we're doing. Okay. Yep. That's what 3 steps teaches you. And that's what we're doing. So anyway, let's take questions. Somebody has a question on things, you know, on anything really.
Sure. Let's see.
Questions. Somebody had a question yesterday on Walmart. I saw at the end of the day. I don't know if he's, I can't remember his name, but someone had a question on Walmart. And so I want to go back, and we try to hit everyone. I apologize. Marco's doing a terrible job here of getting everybody's questions. But no, we try to hit everybody as much as we can. So let's just go through Walmart. We've been seeing call buying in Walmart, positive vibes in Walmart. Here's immediately what I see, something that's a little, you know, it looks a little worrisome. But I'm looking at that, and I'm looking at, okay, so we got this drop, significant drop. It's kind of made its move back here, right to this sort of whatever this 140 level for whatever reason. Had a little dance here, just a little bit of a gap there. So for whatever reason, 140. The 50-day moving average has already gone down through the 200. The 200 is still moving. You see this 200 still moving up. That's a positive. We've taken the brunt here on the 50-day moving average. You see that? Yep. We've taken the brunt. Now we need this to get through this line, 143. It looks like it's trying to do that. I see a good MACD. This is healthy MACD. So the MACD here, you can imagine it's basically the MACD's done this, right? The MACD's done this. You could expect the MACD to do this, and then you're hoping for that, you know, bad word hope, but you're looking for that next move in the MACD. So once should probably come down a little bit or just soften, what you're seeing here, the stock here. Okay, so this is starting to go sideways, but the stock's not going down. It's not coming off, and you have good volume right here. So I'm looking at 140, to me is a big level. And then this, it's got to prove, you know, this is a bad quarter. They didn't show growth in the revenues. The story fell apart a little bit. Okay, we had a nice story. We were long calls. It fell apart. We were looking for 155 and above. Okay, we were looking for this to continue, and it started doing this. Earnings, no good, down. Okay, so we're here again. The market, what we're also seeing, so give you an idea of why this might be happening. It may not be, and this is where we'd have to decipher, are they coming back because the growth story is still there, because they're going to be doing great, because the earnings are going to be awesome, and it's going to show data growth and everything else that would make the story work up here? Or is what we're seeing is over here in the last few weeks, we've been seeing what? If you've been watching, we've been talking about people hedging the retail names, people seemingly getting out of stock, getting into calls, people selling calls, buying puts. We've seen a couple of put spreads. Retail has been, it seems like the big guys are adjusting their risk reward. When they do that, and when they're reducing, you take out all those little names, you take out all the retail names, you reduce that, and then you want to put some money to work someplace. It can't be in cash, so you got to move that money somewhere else. And a lot of times the money is moved to Walmart. Okay, so it's like a little bit of a safe haven while people are adjusting their risk reward. They're taking some money off of the little retail names and say, where we're going to put it. Amazon, Walmart, and Target are the big targets, for lack of a better word, and that's what they're doing. So that's Walmart. It is constructive here. You have this downward pressure, but you have it's constructive. The stock is trading well. This is doing well here. That's all I have to say here. And people have been buying the 140s, all the way up the 140s and the 145s. They're looking for this break over here.
Mm-hmm. And there have also been some news today that a lot of money went to retailers with the stimulus checks, and I think I saw that just today.
I saw that. And you know what's interesting? That they not only did they go to so it goes back to the whole macro picture we're talking about. What's interesting is a lot of this money, someone was pointing out how this money goes from these stimulus checks to the stores buying products that are made in China and that are made in other countries. So essentially all our stimulus checks are being funneled basically to the outside world.
Wow.
who are then they get dollars, and what do they do with dollars? Maybe they buy Bitcoin, they buy cryptocurrencies, they buy. So money is literally funneled. It's really interesting visual. You get money coming from the government trying to help the U.S. economy and workers and getting people back to work, and money is being given directly to the people that need it. There's no doubt that people need it, but when they go buy goods and they buy things, that money is then going right into the Chinese worker. That whole industry of Chinese workers, manufacturing, India, whatnot, it's going to other countries, emerging markets. It's interesting. It's an interesting dynamic. And at some point, something's got to give. There's a guy, I forget his name, Peter something. One of the guys who's big on the housing market when it collapsed, and he's always out there saying, I always listen to him. He's really on one side that the world's come to an end. But I like listening to both sides of the story, and he makes a lot of sense. I'll remember his name. It skips in my name, but very famous guy. People have probably seen him before. Some people on the podcast probably know who he is. But I think that's sort of something to think about, and how macroeconomics and how that's happening. One other point in macroeconomics, I would say gold. We talked about gold, and gold is looking pretty good. You're looking at this chart is starting to, you see this move between, again, you have, let's do a little bit bigger here. Sorry. Just want you to see a bigger view of gold over, let's say, 2 years. Okay. So now we have 2 years, and we're going to do, all right. So we've talked about this before. Stock has a huge move. This is COVID. Okay. And then GLD, gold, price of gold is going up. This is a 1 year long process, 1.5 year long process. And since that high, it's been basically coming straight down. Okay. We can look at this, if you will, almost like a channel here. See that channel? Okay. Yep. Coming down. And what's happening here is it's found this level, 157. You could see that, which is interesting, right? Low here, right? Mm-hmm. And if you just go back, there's something going on at 157.5. I don't know what, but there's something going on at 157.5, right? You got it here, 3, 4, 5, 6, comes back, and now we're back at it again. Okay, 157.5. It bounces here, and now it recaptures the 50. So this is positive, right? The 50-day, you see over here is where we are with a lot of the names that I just showed you, right? The NIOs, the Lees, the XPEVs, all of these big names where this was a huge ramp, and this 50-day is starting to collapse towards the 200-day. For sometimes when it breaks, that's no good, and then you're going to take the brunt of it here, okay? And now the 50 days kind of moved the opposite way where it's different. That means this 200-day is rolling over. See how the red line is kind of rolling over here?
Yep.
Okay. So we don't want that to roll over. So gold needs to start catching a bid in order to kind of stay flat. And then it'll, with time, it'll kind of dip a little bit. And then you want it to keep on going up. Okay. This rolling over is no good, puts long-term pressure on the thing. But you have here the difference between the 50-day and the moving average here is negative, as opposed to here, it was positive. And now you have the stock sort of trading a little bit better after this bounce. I'm going to show you one other thing here. So looking at, by the way, I just go back to the same things every time just because I know, but if you have technical analysis skills in different areas or much better than me, then that's great. That's, it's part of the game, but I just like to look at it simple. And I've shown you this MACD for turns. I look at these for turns. And so it tells me here, MACD down. Okay. And here, MACD, you're looking at the MACD. Let's look at it here. Okay, so price down, MACD makes a low. Price lower, MACD makes a price lower. Price even lower, MACD makes a price lower. Price kind of hits that low again. We're real close, and you see that the MACD is now actually going up here. So that's a positive development as well, and it's trading well today above, we're talking about near term above this sort of, call it 164 range. So you want to see it hold, and maybe you get a move to 170 in gold, 172 over the next, could be quick, could be over the next, 2 weeks, 2 weeks, where you just go bam right to 170, 172. We are long and have been long. Try to be long some gold all the time, or at least when we see things that are moving up. But we're long Newmont, and you see here Newmont is trading well. This looks like a Gold trades 170. Newmont's gonna have a run here. So you see that trend?
Mm-hmm. Yep.
You see that right there, and you see it's broken here, right? Right there, it just broke through. That's a positive development. Now, what you might want to watch is depending on where gold goes. If it goes higher, we think it could trade, something like 70 to 75 range, up to the 75 range up here. Okay, so that's what we're kind of looking for. But you got to pay attention here. It could go to the way these things generally goes. It goes to like 66, comes back down to this line 63, 62, and then shoots up a lot of times. Or if gold just takes up, it's just going to go up here. But again, another way to get your levels, we're looking at 54 and 63.5. So that's 9.5. 9.5 plus 9.5 gets you a near-term look at what? 69.
Yep.
See that? 69 gets to 69. Maybe it stops. It's right around this high. But we're looking, there were call buyers thinking, when we got into this thing, this call buyers thinking up to 75 in this thing.
Right.
Okay.
Nice.
Good.
Nice. Awesome.
2:01, man, on the dot. We'll catch everybody tomorrow. Peter Schiff. Somebody wrote Peter Schiff. Yeah, that's the guy, Peter Schiff. He's got a million YouTube things online. I like listening to him. The guy makes sense. Like I said, he's a little bit on this side. Okay, maybe a lot on this side. He's always saying the world's going to end, but just listen to his logic and then make sure you, before leaving, don't go to bed watching Peter Schiff. Before leaving, go back to CNBC and read something that's like very positive in the world. Or put on, happy and good, because Peter Schiff will tell you. I mean, he's going to want you to buy a bomb shelter, in your back, put that in your backyard. That's how he's very doomsday. So, so be careful. You don't want to get caught in that trap.
Cool.
All right, guys. All right. Be good.
Good episode. Thank you, Felix. We'll see you all next week. Have a good one.
Bye-bye.